Good morning, traders. Um, I had a particularly rough week this week in my brand new XFA. Didn't blow it up, thank goodness, but um, I definitely depleted it. I put in a DLL so I wouldn't blow it up and got locked out. But we had if you look at the daily chart, or not the daily necessarily, but we had a few days there where we just dojied, and even yesterday ended up being a doji. If you look at the 1 hour, um, not necessarily yesterday's price action, but this one right here was very difficult to trade. And the day prior to that was very difficult to trade. And we just stayed in a little range here for a long time. And those were hard for me to trade. Were there opportunities? Yes, they were. But I'm sure I did not take advantage of them. I think I was already locked out by the time an opportunity came up. So I lacked patience this week. I was kind of trying to be a little bit more impatient, I guess you would say. I wanted my money and I wanted it now. And so I behaved in a way that all of my money went away. But I still have my XFA, and I will hopefully turn it all around next week. But I want to talk to you about yesterday's price action and hypos for next week. So yesterday, I put a video. I'd watched a thing about ICT. He's got a lot of information. It's real easy to forget stuff along the way. But what I've started doing, he had a video where he marked out the pre-market highs and lows, and I used to do that all the time, and I didn't do it because he said oftentimes whenever New York opens, it will attack those pre-market highs and lows. And you also mark the previous session, like you can mark London, and you can also mark the New York session for regular trading hours, the highs and lows of that. So that's our regular trading hour high and low. And from the previous day, this would be the lows down here. So we opened with a little bit of a gap in the regular trading hours. But anyway, you mark them. Just New York session, afternoon high, low, London session high, low, or pre-market high, low, and you just put them on the chart. Now, I did put London low here, pre-market high, which already had taken out the London high. And I had that on the chart as we began trading. Okay, so let's go. Let's just look at a 1 minute here. And we can put on regular trading hours at this point, I suppose. Yeah, is this a 1 minute? Yeah. Okay, we got regular trading hours on. So this will show us where we open. It'll show us what we need to see. It looks to me like from where we settled to where we opened, there was a little bit of a gap, and it just hung out there for a good while once we opened. But eventually we took out the high. We left the pre-market high here where we opened, came straight down, took out the high of this range, and then fell out of bed. And we opened at the pre-market low, so we took that out almost immediately, and we came down through the London low. There was also another low on Asia session. This is the low that was created at New York's PM session. So I had that marked as New York high, New York low, NY low. But now it's relative equal. But it's interesting that it left that low. So that may be a target for next week, but it's also a bullish signal. The London low was hanging around here, and there was an Asia low. It took out both of those. You can see them on the extended hours. When we came down here, London low was marked right there. It took it out, and then Asia was just a little bit lower than that, and it took it out. Once we took it out, we were heading up the rest of the day. And I should have made a lot of money yesterday, but I didn't, because my trading setup is right here. We got the last up close breaker, or last up close candle before the run on liquidity. Clear reversal pattern, not so clear. So it's in here, and I got in right here. And we started dancing and come back touching the breaker multiple times. And I get nervous in those situations because I think it ought to leave town, but it didn't leave town. It just kept hanging out. And so I took my position off. But had I think I got in right here, and I put my stop down below this little fair value gap right here, which was respected. It was never traded back into. But we did meander here for a good long while. Candle bodies all respecting the breaker. Wicks doing the damage. So a stop down below at the London low would have been fine. You could have been in along the rest of the day. When we finally did move away from here, we moved away with a fair value gap. And you can see on the NQ, it respected that fair value gap, touched the center to the tick. If you didn't get in down here, you could have got in here and still been good for the rest of the day, up until the close of the day. I'll show you that here in a minute. Over here on ES, it was actually a stronger move on ES than it was on Nasdaq. It just continually we did have some pullbacks, but it just continually kept ticking up and up and up. And the pre-market low and the breaker are the exact same height. But once we got above the breaker, candle bodies respected the halfway point for sure. And if you didn't want to get in at the top of the breaker, you would need to put your stop below this fair value gap, the candle that started it. So you need to put it about right there at 59.33.75. And so that's a 2-point breaker. A stop down here would be if you did if you did a full contract, it would be $200 stop loss. Maybe a little bit lower, you get $200 would have been fine. And then it went up the rest of the day. Let's say you want to avoid all this chop. You get in and then you're like, no, there's something that doesn't look right. Right here at this fair value gap, same as what we're seeing over here, it didn't quite respect it as well as Nasdaq did. It did get a little bit in the lower quadrant of it, but candle bodies stayed within it, and that's good. That's what you want to see. So an entry here, a tick above that, stop below the candle that got you in it, it would have held. And that stop, let's see, 42 to 40, that's only $100 stop loss if you got in right at the top of that fair value gap's high. That's only $100 stop loss on a full contract. So that would have been the premium entry right there. And then, of course, we went up. We took out the pre-market high over here. Nasdaq's pre-market high was much higher. This is early in the day. This is only noon. We haven't even gotten close. We haven't even taken out that high on the Nasdaq yet. But we do eventually work our way up and take out the pre-market high. And then the end of the day comes, and this is well after the close. This is like 15 minutes before the market shut for the whole weekend. We start falling out of bed, and I just find it really interesting. We come straight back down to the breaker. See that? And still respected the midpoint of it. And over here, same thing. I extended out we need to do extended trading. We came straight back down. We actually went into the fair value gap here. Didn't quite. The pre-market low is actually the breaker, so we didn't quite make it to the breaker, but all the way back down to that fair value gap in the last 15 minutes of trading Friday evening. And we also took out the weekly high just barely. I think that is the weekly high. We were in no man's land up here in the ES. That right there is the high of the week. So that's the price action from yesterday. I find it really interesting. We came all the way back down to that fair value gap, and we did it on a rope. I mean, that's kind of trade you love to get into because you're in and out, and 15 minutes later you got a pile of money. But it doesn't really give much of a signal up there to go short. I mean, you could, but we can't even trade on Topstep at this hour, so it's not something pertinent for this discussion. So that leaves us with next week. What are we going to do now? Let's look at a 4-hour. I'm going to get rid of these pre-markets. Oh man, I hit the wrong one. There we go. Pre-market low and high. Got to go away. London low and high. It can go away too. I'll leave the 4-hour low because that's important for what we're doing next. Okay. And so we can go ahead and do the same thing over here. Sorry, y'all have to watch all this. I should have paused it. Fast forward through it. Okay. And the relative equal lows we need. And these can go away. I think I can just hit the delete button there. All right, very good. Okay, so there's our next week's hypos. We did come back down into that fair value gap and stopped. That was the close of business. So that turned the green candle, a candle that was green all day long, turned red right there in the last 15 minutes of the day. So if you look at the ES, it kind of went up. It stair stepped up, and then came back down to, I think that's settlement price from the previous day. While Nasdaq pretty much traded flat, didn't take the weekly high, while ES made new highs. So you can see right here on a 4-hour, there's a little range forming here. You got the high of the range and the low of the range. And on the ES, it's relatively equal lows. These two right here, dead even. That one's a little bit lower. So if you get a weekly chart and you put in the full candle, you put a fib on the entire candle of last week. Just do it just like that, all the way up to here. Our 25% retrace, because we are still rather bullish, our 25% retrace is right at the top of the fair value gap that I have marked out. And this is on, I think that was on the daily chart. I put it on there, yeah, 4-hour. It's a 4-hour fair value gap. And so you can mark that out, or you can just know that the top is going to be the 25% retrace. And I'll just copy this one and put it over here. Okay. So the 25% retrace is that red line. And then CE is the 50% consequent encroachment. You can label it 50% if you want. So there we go right here. Uh-oh. Why did we not copy? Okay, let's go back over here and try again. Copy. Where's my paste button? Okay, forget it. I'll put that in later. 50% retrace would be right here. You can mark that out and label it. In the interest of time, I'm not going to do that right now. Just show it to you. And then you can get rid of this fib right here. There's no sense in having it on the chart because it's just going to muddy things up. So that's What I've been seeing each week is about a 50% retrace of the weekly candle. Once you get that marked out, you can go back to your daily or your 4 hour. You can see this fair value gap here corresponds very nicely with the 25% retrace of the week. Um, we did trade up a little higher. We do have this low on the 4. These are close enough together you could call them equal lows. These are definitely equal lows. So, and because we did fall off right there at the end, I think we're going to be still bullish. I think we're going to be aiming for all-time highs, but I think we could pull back into this area here, maybe to halfway to this 4 hour fair value gap here before we offer higher. I don't think we'll come all the way back down into here, but we could. 50% of the week would be all the way down to here. So, I mean, that's a possibility. You can see this fair value gap before we started that march up, it came down and it touched it right there, the midway point on, I think it was on both products. No, it wasn't. This one right here was the one that came down and touched it here. Yeah. So ES was a little bit behind on that, but this is a fair value gap and it touched it to the dead center, pretty daggone close to it. I think what happened on this day, I wasn't watching ES, I was watching gold. And I had the daily candle marked out for the consequent encroachment over here. And so when this came down, it only came to the 25% mark. And I thought, well, it's got a little further to fall. And I didn't recognize it as a reversal signal. I missed that trade that day. But you can see it respected it very well. ES dipped a little bit below and then went on up. So this has kind of convinced me. I don't know if it's going to be this way all the time to start marking things out on a 4 hour chart rather than just strictly on a daily chart. Daily fair value gaps are definitely important, but if you look at the whole daily candle, that's only 25% of it. But on ES, if you mark the daily candle, it was 50% of it, I think. It may have been even a further, deeper dive back. But marking out those levels gives you an idea of where we're going. This day it was a really nice retrace. So, and that's still, we could still be playing off of that same fair value gap. We could just go to the top of it. Maybe we want to fill it in. I don't know. We're going to either go up or down. But we created a new fair value gap over here on ES, where we didn't create a fair value gap over here. So I'm thinking ES is going to want to trade down to somewhere around here and then continue higher. Take out these relative equal lows, 25%, leave that open, and then we continue higher. Start aiming for that weekly high from last week. That's all well within reach for a day's movement, maybe 2 days movement. But that's my hypo for the week. Hope you can use that information to make a whole bunch of money. I love each and every one of you. Remember to be kind to yourself and be kind to one another. Until next time, trade well.